Welcome all. In this video, we will learn about airline privatization. On completion, students will be able to explain about privatization of airlines. Airline privatization. It refers to the process of transferring the ownership and control of a state-owned airline to private investors or companies. This process is common in many countries as government seeks to reduce public sector involvement in business operations and improve efficiency, profitability, and competitiveness. Privatization can involve either selling share of the airline to the public or selling the entire property to private company or consortium. Reason for airline privatization. First one is efficiency and cost reduction. Private companies are often seen as more efficient than state-owned enterprises as they are driven by profit motives and are less burdened by political interference. Financial performance. Government may choose privatization to alleviate the financial burden of supporting an airline. State-owned airlines often rely on subsidies, and privatization can reduce the need of taxpayer funding. Competitiveness. Privatization can lead to increased competition within the airline industry, which can improve services, reduce fares, and stimulate innovation. Next one is focus on growth and development. Private owners may have more flexibility to invest in new technology, expand routes, and pursue mergers or acquisitions that a state-owned airline might not be able to do efficiently. Government debt reduction. By selling a state-owned airline, government can make significant revenue which can be used to reduce public debt. Method of privatization. Initial public offering. The government sells shares of the airline to the public through the stock market. The airline then becomes partially or fully publicly traded. Sale to private investors. The government may sell the airline outright to a private company or consortium of investors who take full control of the airline. Public-private partnership. A government and a private company may collaborate in a joint venture where both parties share ownership, control, and profits. Management buyout. In other cases, the management team-owned airline may purchase the airline from the government tax operations. Benefits of airline privatization: improved efficiency. Private owners typically work to cut inefficiencies, reduce costs, and streamline operations. Better customer service. Privatized airlines often focus more on customer satisfaction to remain competitive. Increased investment. Private companies are more likely to invest in fleet modernization, new technology, and expansion into new markets. Profit motive. A privatized airlines focus on profitability, which improve in performance and market expansion. Challenges of airline privatization. Risk of job cuts. In an effort to increase profitability, privatization may lead to workforce reduction or restructuring. Loss of national control. Some citizens and government may be concerned about losing control over a national asset. Price increases, with privatization, there may be a reduction in public subsidies, which could lead to higher ticket prices for consumers. Social or economic impact. In some regions, privatization may consequences for local economies, particularly if the airline cuts profitable region.